Hello dear traders, welcome to another live webinar. My name is Angelo Ioannidis, your host, mentor and friend for trading. I hope you guys are all doing very well. We have a very nice strategy lined up for you today. It's one for binary trading and you can use it on any time frame that you choose. It's not a hard one, it's not a complicated one, but there are some small little points that you have to get right if you are going to use this strategy successful. So pay attention on a few slides when I mentioned there, and you should hopefully have really good results, I hope. To my live audience watching, guys, let me know on the chat if you can hear me, if you can see me, and if you have any questions throughout the webinar, definitely let me know. I'll be answering lots of them at the end of the presentation and after we go to the live as well. I'm not seeing much going on the live right now on the chat. I hope you guys can see me. I hope you guys are watching this. Last notifications I see here on the chat were from some traders a bit earlier before the webinar started. And I see here that there's a reminder to like and subscribe to the channel if you find this useful. I'll do that as well, just give you that info on the page. It does really help our channel if you do find this useful. If you do like the video, give us a thumbs up, click the notification bell, subscribe to our channel, so you could be reminded for future coming webinars. There we go. Watching, nice. I do have an audience. I hope there's more than one person, but if it is one, hopefully we're gonna get more coming. Let me know in the chat, guys, where you're watching from. Like always, I hope Alexander is watching from the Ukraine. My God, it's like future telly. You see that? I just said it and it came right on the screen just when I said it. Welcome, Alexander. Hopefully you're doing well and you haven't missed one yet. Very happy to see that. Okay, can hear, can see, lovely. There we go. Here comes the chat now. Love from India. Well, lots of love back to you, to India and all your people in India. Sri Lanka is in the house as well. Welcome. Run the world from UAE. Bet you guys are still having some nice warm weather in the UAE. Felix from Uganda. There we go. We got everyone now. We got Asia, we got Middle East, we got Africa watching. Beautiful. Pakistan watching as well. Welcome, Ahmed. Let's jump straight in. Let's get to the presentation, and hopefully we're going to save some time to show quite a few good examples I found on the live account just before we got started. Okay, here we go. Title of the webinar today is a trending strategy for binary options. Similarly, we have another one coming in the pipeline, which is very similar setup, and that one will be for Forex. So do make sure to be registered to the account, subscribe to our channel to be notified for that one, and you can learn how to use it on binary and on Forex as well if you're a Forex trader. Let's get started. First thing first, we're going to jump straight in and show now what are the ingredients for this trending strategy. First thing we're going to need is the MACD. This is a trend following momentum indicator that shows the relationship between two moving averages of a security's price. Very important. Then the second thing we're going to need is a EMA. This is a moving average that places a greater weight on significance on the most recent data points. Two things. Only two things we're going to need for this strategy to work, and I'm not sure if everyone knows what the MACD is, if everyone knows what the EMA is. If you don't worry, I will explain both of them right now. First and foremost, the strategy setup, what we're going to need for the strategy or how to set it up correctly for your trading. This is important, guys, so do pay attention to this part. Candlestick timeframes can be any. Binary option traders now, the expirations, it can be anything between 4 to 8 candles depending on what kind of candles you do set up. If you choose, for example, 15-second candles and you're planning to do a 1 minute or 2 minute trade, a 1 minute trade basically is 4 candles, a 2 minute trade will be the 8 candles. If you like 30-second candles, then again, you'll need to do a 2 minute trade, a 3 minute trade, or a 4 minute trade. So anything between 4 to 8 candles expiration, and you can adjust the timing to what you prefer with the candles to your trading. Okay, I love MACD. Nice. Well, hopefully loads of other traders are going to love it as well. Nice. Let's keep on going, guys. Indicator 1, as we mentioned, it is the MACD on the default setting. Indicator 2 is the EMA, so we're going to go to moving averages. We're going to choose an EMA instead of the SMA, which is the standard, and we're going to set it to 200. That's it. Now let's explain the MACD. For traders who don't know what it is or how to use it, we're going to go through all the parts of the MACD just to make sure you are all familiar with it and comfortable using it. First part of the MACD is the MACD line. This is the blue line we have, as you can see on the screen here, in the little white circle, and it just creeps on going along, all along the indicator. The second part is the signal line. This is the orange line that is zigzagging above and below the MACD line. Very important. These are the two main ones we're going to be using for today's strategy. Then the third thing we have is the histogram. This is the green and red bars that get larger and smaller depending on where the market is heading. And then in the middle of the screen, you will see that there's a gray line there. That is the zero line. Very important for our strategy, so do remember this part as well. This is the setup though. These are the four elements, the four parts of the indicator, and it's nothing complicated. Once you can break things apart, understand what they do, what we're looking for, it should be nice and easy. Practice, of course, everything first. Don't just jump straight to the live account with anything new that you're unfamiliar with. And hopefully, once you get good results coming on the practice account, you can switch over to the real account and hopefully get a good success going. Right, little breather. And now, first thing we're going to look for now, this is a signal that we can use just on its own. It is going to be giving us not so great results. We are going to have a mixed bunch. We are going to be having more false signals when we're just using this on its own, but it is possible. Now, the important thing is we want to see the crossover happening. When the signal line crosses above the MACD line, the mini trend is turning bearish. Important word here is mini trend. So the market is going in a certain direction, and there might be a pullback or an impulse back in the main direction. So these are changes in the mini trend. This is what the MACD with the two moving lines, the signal line and the MACD line, this is what they will be showing us. Moves and changes in the small mini trend. So when the orange one goes above the blue one, then the market could be turning bearish, and as we can see here, that is what happens at this moment above. The markets do drop, and there is a nice steady drop all the way down to there. So it's pretty clear that this did work in this example here. Further down, there's a cross now again on the other side. This one now is the MACD line crossing above the signal line. So this shows now that the trend is the mini trend is turning bullish. Again, we can see it on the market here. It's not so clear as the previous, but markets were trading more or less at this price. Then we can see a steady increase. So it does come to the previous high. So there is a bit of an increase happening there when the crossover happens. And then further down again, one more switch, one more direction change. This time the blue goes under the orange again, so the signal line crosses above the MACD line, meaning that the mini trend is now again turning bearish. There we go. This is shown here very, very clearly. The market does drop significantly from the high point where it was trading up here. It finds itself all the way down there. So this clear drop here we can see on the price. Right, so let's move it along. Not to lose time, if you do have questions, guys, if you do miss something, do let me know. Okay, let me just click something here so I can see the chat again. Something went wrong there. Okay, I shouldn't have clicked that on the chat, so now I can't see the chat. Right, that's not good. Next, United Kingdom. Can I go back from here? Nope. Okay, I just lost the chat. Hopefully I'll be able to bring that back and get it back on the screen. If not, one of my tech guys will have to come in here and help me get this back on the screen because I can't get the chat back on right now. Anyway, guys, let me just power forward now and keep on going with what we're showing here. Now, we're looking at the histogram, right? What the histogram needs for us to do, it's showing us now the bars. When we see the bars are getting larger and the MACD line is moving apart from the signal line, momentum is growing. As we can see it here on the screen as well, the bars are moving, the two lines are moving away from each other. This means that momentum is growing, and we can also see the bars here are getting larger and larger. So once this movement happens, this is a useful information. We're not going to be using it that much on our strategy today, but when the bars are getting larger, the MACD line is moving apart from the signal line, momentum growing. Simple, easy to understand. And then here we have the opposite. When the bars are getting smaller and the signal line is moving closer to the MACD line, momentum is reducing. We can see here clearly the lines are now going parallel more or less, and here they start coming closer together, and now we see the bars getting smaller and smaller. This is another useful and important part of this setup. Everyone should be okay with the histogram. Everything is working fine. the EMA 200. This is very important now. This is the second indicator we're going to be using, the second part of our strategy. And it's a very, very simple thing what we're going to look. When the price is above the line, the main trend is bullish. Main trend, important word. Here we can see the line moving along. All this above means that the market is in a bullish main trend. Very important to identify and remember this part for what we're going to be doing. Let me just go back a bit. There we go. And then the opposite happens. When the price is below the line, the main trend is now bearish. Simple, easy. I think everyone can understand the simplicity of this indicator. It's taking a measurement basically of the last 200 candles and displaying it with that red line where the market is, whether it's above or below the average of these 200 candles. Very useful for what we're going to be looking for. We want to now combine them together. So this is what we're going to have to do now. This is the meat of the webinar. This is the most important part. Buy trades. We're going to be buying trades when these three things, or two things more or less, is going on. First and foremost, we need to see that the market is above or below the main trend. For a buy trade, it has to be always above. Clearly, the red line is splitting the screen and the market is above the red line. So this means I should right now be looking for buy trades. This is the thing. Always remember, first step, where is the EMA? Where is the market? Once you identify it's above or below, then you know what kind of a trade you're looking for. Now it's above, so it means I'm looking for buy trades. Part one, locked in. It is above. At this next stage, what I want to be seeing is a crossover happening. So right down here, the market has to be under. So the MACD line crosses above the signal line, and this has to happen under the zero line. Very important. These words here are very important, guys. I'm going to say it one more time. MACD line crosses above the signal line, under the zero line. Zero line, as we can see it, is the gray line going along here, right? So the market, the moving averages, the EMA is up there, as we said. The MACD line and the signal line now are under the zero line, and there's a cross. The blue line now clearly is moving above the orange line. This for me is a go signal that I can go ahead and place in a trade as soon as I see that separation happening. That's it. We have a signal to buy on the top of this candle more or less, or around this level here. Just when the crossover happens there, we can identify it, pull a line up amongst this candle. Anywhere along here, we're going to go for a buy trade. And it's pretty clear, the market just goes straight up as a result of that, more or less. So we got a nice signal of what the market was going to be hopefully doing. It did it. So don't waste time. Once you see the blue line has cleared above the orange line, that's your go signal. But very important, traders might make mistakes in the beginning. You might make a little mistake where you will see this movement happen and you'll think, okay, it's above the market, a crossover is happening, where's the cross? Make sure it happens under the zero line. There could be a cross happening up here above the zero line, and you think, okay, perfect, there's a crossover happening, it's above, there's a cross, I take the trade. No, this one is above. It's above the zero line. This one is not good. Has to be under. This small window here, when it comes underneath, you want to see the cross happen there. That's when we can take our trade. Simple. Once we get used to it and familiar with it, a couple of the trades, once you have it locked in, it should hopefully be working wonders for you. And then for the opposite, for the sell trade, it is exactly the opposite of what we just said right there. First thing we need to see is the market price is under the EMA. On the example here, moving line is above, market is underneath, showing to me that the main trend is a downward trend. Then next thing I want to see is the signal line crossing over the MACD line and over the zero line. Once again, zero line on the screen, it is along there. The crossover happens above it. Perfect. Market is under the EMA. Crossover happens above the EMA. Once I see the separation and the blue line is under the orange one, or the orange one is above, if you're a glass half full, half empty, that's up to you. But once we do see that, the crossover more or less happens somewhere in there, I would say. So it would be more or less in this candle is where the cross more or less starts happening. So if you can catch out on the early part, once you identify the cross, you get your trade in somewhere along this line. Anything underneath the line is a winning trade. So that will be 1 candle, 2, 3, 4, 5, 6, 7, 8, 9, 10. If we opened it on that, but realistically, it would be close on this example. But hopefully, if you got it in the early part here, just when the cross happened, then hopefully it would get off to a nice trade. Close one, but still a winning one on this example. And then once you have that, there you go. The market does drop. There was a bit of a delayed drop, but there is a drop nonetheless. If you were to open it here, look where the market ends up at the end of this trend. So the main trend was downwards. There was a pullback that happened here, and then the market went back down again. So in technical speaking, the market always does end up getting into a trend. There might be a sideways movement, a non-trending moment, but sooner or later, every asset does get into a trend. What this setup will do for us, it will more or less signal the end of a pullback in the main trend. So the trend, for example, here is going downwards, as we said. It's underneath the main trend. The main trend is a downward trend, dropping to there, pullbacks. The pullback happens up to here, drops again down to there, pulls back up to here, and then drops to a new low. Another pullback happens, and then maybe off screen it might have came even further down if the trend continued going negative in downwards motion. Right? That's not complicated, is it, guys? Now I have an example for you guys that I made on a trade, so it shows in more or less step by step. This is exactly when the trade was placed in. It was a money risk management adapted trade based on my balance, based on the trade. So I went for the trade, clicked it in, and there was 1 minute 20 remaining at the time of this screenshot. What happens is with the markets, let's take it step by step. First thing first, what do I see here? Market is in what type of a trend? It is in a uptrend, right? Market is pushing upwards. There's the main trend. It turned now bullish, pull back up again, pull back, and now it resisted going underneath and it's pushing off again. Very, very good. Part one, I have it. What's going on now? Straight away, my attention is going down to the MACD, and I'm looking for the crossover. The market is now, the two lines are underneath, which is great, under the 0 line. And as soon as I see the separation, as you can see, I put the trade in already. So it was opened around 5-6 seconds earlier. So the separation already happened. It started. I saw the blue line going above the orange, and that was it. I could put my trade in. I did exactly that. Trade was placed. We're going to push it forward now a couple of minutes. The movement that happened, that's where the trade was placed. And it was a clear upward movement. Look at the separation where that was back here. Movement went straight up. The two lines moved apart. The bars were getting nice and bigger all along. So everything worked perfectly on this example. Trade was opened and it trade closed. This was a 1 minute 8 candle trade more or less. 1 minute 30 on the timer plus another 30 seconds always, as we know, between the two trades where the trade is to expire. So it was a 2 minute trade and it was absolutely perfect. No worry with it. I'm going to zoom it in for you guys a little bit more so you can see a bit closer what happened. There was a separation, as we said. Market was above here, and the trade was opened a little bit lower than the dotted line, but let's just even use the dotted line here. So this was where the trade was opened. 1, 2, 3, 4, 5, 6, 7, 8. That's where the trade closed. And then I had maybe on the 30-second when this red candle came in, touched underneath, there was a couple of seconds of worry there. When it came back up, came up, higher point. When I saw the dodgy, then I saw a nice big green one. I was already very relaxed, very confident, and confident. I have the money in my bag more or less at that moment, I'm believing, and it was a beautiful trade. Hopefully you guys can have many examples like these ones. Many trades like this will come for you guys as well. This was 15-second candles, right? So, as I said, 2 minute trading, 15-second candles. That's 8 candles for my expiration. Right, let's switch over now to the live and see some examples on the live account that I found. And also I want to show you guys how to set things up, right? How to get this setup working. First thing first, this is now on the New Zealand dollar and the US dollar. This is what the market will look like when you don't have any indicator. You're just looking at the market. It is pretty clear the movements of it. It is an uptrend here. There's a downtrend there. Markets are climbing again now, but it is a bit naked. There's not much to go by. You can, of course, use your indicator, your candlestick patterns just to go with this alone. If you're not familiar with that and you want to be using strategies, indicators, well, this is what we got for you guys today. We're coming first straight away to the indicators. We're going to go to popular. You can see here already the MACD is there. Or if you want, you can just type it in up top here, MACD, M-A-C-D, and it will appear. You just click on it. We're going to implement it directly. No changes required. And just apply it. There it comes now. On the bottom, an oscillator that comes up on the bottom of our screen. Back to our indicators. No need to type. Just straight across. We can see moving averages here. Moving average here. Click on it. And here's where we're going to make the alterations. We're going to go to 200. We're not going to take an SMA. We're going to change it to an EMA. Put it in. You can make it any color you want. I don't mind it in red. It's fine. Make it a bit wider so I can see it clearly, and you guys can see it with me as well. Apply it, and there it is. Now I can see even clearer what the market is doing. Well, as I said before, the trend, it's way higher. Look at the momentum bars I can see here with the two MACD lines, MACD and the signal line, how high they went. So I'm getting already loads of more information by doing this. Okay, so once you've done that, you come back to here, back to your indicators, go to the added. It will show you what you have added on, and there we go. MACD, MA, MACD, and we can save it as a template. Just click on Save Template, add in any name you want. I would basically just name it MACD EMA. Once you do it, you have it saved in on your templates, and you don't have to go through the bother every time of adding this onto every asset you're trading. You'll just come to your templates, and you'll find it here in the template saved. I have a whole bunch of them, so all the way at the bottom here is my, where do I have it? Two EMA stochastics, triple trend, it's on the bottom. So there you go. MACD and EMA, I have it saved in. So whenever I start trading and I want to use this setup, I'll just click on this and it will appear like this on my screen. Simple, easy, and very, very useful. Now, live examples, guys. I have found some examples from earlier in the day today. It is still on the 15-second candles. Let me just zoom in to bring you these examples now of what we're looking for. So first marker I have here, what's going on? Market is underneath the line, right? So the market is in a downtrend. The main trend is down. Touched it a few times here. It resisted breaking through the EMA, which is a good sign for what I'm looking for. And then what happens? I start paying attention to where the MACD line and the signal line are. Perfectly for me now here, they're both above the zero line, which is great. Once I see the separation is when I'm going to go for a trade. Now on this example, it was a bit of a dodgy moment because there is a bit of a separation here, but the market is zigzagging very, very close to it here. So this one here, if you were to take that moment temporarily, just here it breaks underneath with over. So there was a moment here, but we do see attempts. This one was not so clear. But on the second phase of this trend movement here, it's a lot clearer. Clearly now I can see the separation has happened. The orange line is above, the blue line is dragging down. This is the moment. Anywhere along these candles, there I can see a separation clearly. So let me just draw it up amongst there. So anywhere in this little zone here is where I'll be looking to place a trade. If I catch it on this part, this part, this part, it doesn't really make a difference. The market did go in a perfect downward movement, so we can not even need to count candles. Look at that. Anywhere underneath is a winning trade. This would have been a sell trade, of course, because it is underneath the EMA, the market. So we're looking for sell trades straight away. Beautiful one, straight down, perfect, easy winning trade if you did open it on any one of these three candles. Even a delayed one, but I would say by this point, the separation happened very, very clearly. So in these ones here, these 2-3 candles there would be a lot better. We can see clearly the separation on the bottom of the screen. Okay, let's take it forward, have a couple more to show. Here is a buy example. This one is very close to the line. We will be zoomed in, of course, when you are doing these trades. And as we can see here, the market is underneath the zero line. Let me zoom it out to find where the moving average is, the EMA. It's under. So the market is above the line. This means very easily, guys, it is a buy trade I'll be looking for. The market is in a predominant uptrend and pullback has ended. What I'm looking for is market climbed up, reached there, pulled back, up again, pulled back, and it's starting to climb. This is what I want, this upper climb moment. So I want to see the separation happening in the upward direction. Let me just zoom in a bit more to this underside here. It does happen very close to the zero line. A brave trader at this moment would see that the separation is happening. The blue line is appearing above the orange line. It is right on the zero line here. A brave trader would take it. If you're not so brave, you would wait maybe a little bit longer until you clearly see it now coming above the zero line. And then you could go for it. So on this candle or this candle, if you're a bit more brave, you would take your buy trade. So anything above this line is a winning trade. And again, I don't even need to count. I can see clearly that even up, if you are late to start it, every candle closes above that moment. So this would be a buy trade, and it would be a very nice winning buy trade. Let's take it out. I got a couple more examples just to show how frequently this happens as well. There was 2 examples already. Then there's another example here. Same thing. Market is above the EMA, so I know it's going to be a buy trade I'm going to be looking for. Crossover happens underneath. By this moment, let me just take it out again. I did zoom it in first. 1 second, guys. Okay, coming all the way in. So there's a separation, happened already. Blue line is above the orange line, underneath the 0 line, and this we already decided that it is above the EMA, so I'm looking for a buy trade. At this moment, somewhere along this candle is where the separation happens. By this candle already is widely separated, so among this candle anywhere. Let's say you open it here, this moment. Let me just zoom it out one more time, just to show what the market did do. So it wouldn't have been such a great win unless you opened it all at the bottom. Then it would have been a very, very nice win. But if you open it here, again, at no moment did it even touch into the negative. So it was straight away upwards and in the money. I do see your questions, Aziz. I have 2 questions. Preferred candlestick time frame 15 or 30. Nice question. Any identification of fake signal on this strategy? Well, we are of course going to get some fake signals on the second question you have there. Like every indicator, it's not 100%. There is no such thing as the perfect indicator that gives you 100% success. If you do see a video where somebody promises such a thing, then clearly that is a video that you can dislike and call and don't watch those videos again. There is no such thing as a perfect signal. So what we're looking for is success rate. If you use this thing, let's say 10 times, and you have 8 winning trades and 2 false signals, that's 80% success rate. That should be giving you a nice profit. And with your money management setup, that should be hopefully enough to close your day with success. So that's the second question, Aziz. The first one, 15 second or 30 second, that totally depends on your preferences as traders. I have it on 15 second. This is what I prefer. I prefer doing 2-minute trades. So I'm looking for 8 candles on the expiration, but it can be 30 second as well. I can use it on the 4 candles and 30 seconds for the same thing. Instead of, like I showed before on the example, if this was on 30 seconds, let's say, not 15, I'd open my trade here. This would be 30 seconds. 1 minute, 1 minute 30, 2 minutes, and the trade ends there. So at this moment it crosses over. So I would close it there on this 4 candle. This would be my win. If this was an 8 candle trade, so I'm, let's say, doing a 4-minute trade on 30-second candles, that means 8 candles. 1, 2, 3, 4, 5, 6, 7, 8. Closes here, right? So I opened my trade there, it closed there, a win. So it would have been a win on both. It's up to you, whatever you guys prefer. If you don't have a preference, if you like working with both, 15 second, 30 seconds, great news. We have a practice account, guys. We can practice this a couple of days on our practice accounts and hopefully get the results we're looking for. If you test it one day on 30-second candles and you have a very good success, you try it the next day on a 15-second candle and you don't have such a great success, well, you just answered Aziz's question, which one do you use? You use the 30-second because it's better for you. If it's vice versa, the other way around, you try the other candle, right? You try the 15s. If it's giving you better success, that's your one. Easy, simple. Never stick to a guidebook. There is no such thing as the perfect answer. It can be according to you. Use a strategy on FX. Take profit 1 to 1 or 1 to 1.5. Good result on binary option. 10 candles work good when good trade. Nice one, Alexander. Very, very happy to hear that. So you're familiar with the strategy. Excellent. Well, guys, I do have more examples here. I'm just going to breeze through them. I'm not going to emphasize too much. Here's another good example of a buy. The market is above the EMA. The crossover happens under the EMA and the market climbs up again. Just to draw the line, let's say right here, I know already the separation happens. So on the bottom of this candle or amongst this candle, I can see already it's separated. So let's say I open there. That would be a nice entry. Here would be a bit rough because that's 1, 2, 3, 4, 5, 6, 7, 8 candle good. 9, 10. 10 would be a bit worrying. 10 closes right there at the bottom. So the 10th candle will not have been so great here. 8 candle up here would be nice. 4th candle there would be very nice. So again, this one would be a bit twitchy, a bit nervous for someone taking a 10 candle trade or a 2.5 minute trade, let's say if you're doing 15 seconds. Moving forward again, another moment happens here. So we're looking at 15-second candle, guys. It happens every how often? I'd say this distance between these two is maybe 15 minutes apart, something around that. So it's not like you wait forever, but it's also not a signal that comes every second. So if you are trading and you're finding a signal every 2-3 minutes, then clearly you're not following this correctly, and you are breaking the rule a little bit by maybe taking a moment like this where it's above the market is above the EMA, a crossover happens above the EMA, and you'll take a down trade here for mistakefully. It might win, but it is breaking the rule. You're basically just going only with the crossovers if you're doing that. You're not taking into consideration the moving average. We want to have less trades by doing this, but better trades, more successful trades. If you do 10 trades and you win 8 of them, that's 80% success. If you do 20 trades and you win 12 of them, that's not as good a success, right? You're not going to have as good a result by doing more trades but not as many winning trades. All right, going forward again, here was another signal for a down trade. The separation happens just above the 0 line, so I would take my trade on the top side of these two candles, or amongst those two candles. It would be a sell because the market is under the EMA, and at that point, everything underneath this line is a winning trade, above the line is a losing trade. So let's say I took it up there, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, up until 14 candles, they're all winning ones on this example here as well. So there are false signals as well. I didn't want to look deliberately for false signals, but I'm sure there were a couple of false signals as well that happened, and it is going to happen. You are going to have some losing trades. Don't lose your cool. Take it on your stride. You're going to have some losing trades every now and then, and there's nothing we can do about it. It is what it is with the markets. I mean, if it was that you win every single trade and you don't know what a losing trade is, it wouldn't be called trading. It would be called winning or getting rich easy, or they'd make a movie about it starring 50 Cent most likely, or something like that. Some great celebrity like that. Okay, so going forward, this is all afterwards, I believe. So yeah, didn't find anything after that because my webinar more or less started. I think this covers it. You guys should have a good understanding of how this works. I'm going to be switching back for the Q&A now. I'll leave it on the presentation on the account for a little bit longer, just so we can perhaps show something if necessary, if any questions you guys have. Okay, Ruthless on site. Will there be live trading session in the future? Would be great to get it live insight. Okay, well, that is definitely a very good feedback. That's something I've already asked to see if we can do, and hopefully we are. Hopefully we are going to be doing that. But I love that feedback. If there's anything else like that, Ruthless, or anybody else have any other nice suggestions or things you want to see, let us know. And again, for anyone joining late and not seeing the beginning, if this video helped you, if you're watching this video after it went off the live and you found it useful, please consider liking this video, subscribing to our channel, getting the notifications as well to be alerted for all future webinars. So give us a thumbs up, subscribe to the channel so you notify yourselves as well for future ones. Like I said before, we have the same setup coming up soon for Forex. So that's going to be, I believe, in the beginning of November, that one. Same strategy for Forex trading. We've got a strategy coming up for gold, which is going to be a very, very good one, and loads of other ones. We're going to be uploading as well soon. We're going to be uploading a video for fractals. So if you're familiar with the fractals indicators, then we're going to have a video uploaded on our channel very soon in the next couple of days. I believe it's next week we're going to be putting it up. But yeah, click the notification bell to be notified for that one. And Run the World from the United Emirates is saying lol. I think I didn't stutter, but if I did, maybe that's why. Guys, more questions. There's no more questions. If you don't have questions, I'm going to end it. But before we do that, I'm going to wait a bit more for a few more questions if we do have them. Do jump on it, guys. Test it out on your practice accounts. Give me feedback on the next one of how your results were with this one. If you like it, if you don't like it, if you have any concerns, you can always write it in the comment section under this video after it leaves the broadcast. And I'll try my best to answer some questions if there are questions relating to it. New traders, if there's new traders watching this video and you don't have an account yet, in the description of this video there is a link. When you click on that link, it will take you to registration where you can register an account with us, and you can, for free of course, make an account. There is a link here. Now I see my moderators put the link here as well on the chat. So yeah, click on the link, register account, super easy, absolutely free. You'll start up with your practice account, which has $10,000 that can be replenished at any time when it drops under the 10,000. Practice your trading, get some good results. Once your confidence is up there and you're ready to go, you can start your trading on the real account whenever you're ready. So give that one a shot. Okay, Ruthless. Are there any common mistakes traders make when beginners should watch out for? Nice one. Well, definitely there's mistakes. Ruthless. Money management, we do have a video on it. That's a very, very good video that teaches, we can teach ourselves basically how to control our emotions and trade with a certain amount of profit that we're aiming for, not just to sit and trade recklessly. Many beginners make the mistake where you get a bit greedy. If you have a good day and you started winning, you get into a very good draw, you made a couple of $100 profit. It has to come to a point where you say, okay, that's enough. I made my target. So targets. We all should have targets in life, right? I want to have a nice car. I want to have a nice house. I want to have many beautiful children. These are all targets. Traders have to learn to have targets as well. I heard it when I was working as account manager for 5 years. Many traders would tell me that I had a great day. I was making $500 profit. I got carried away, got greedy, and in the end, I lost all the profit or half the profit. So it's very possible to just lose control and end up losing all those profits. If you have a target though, if you said I'm going to aim to make 20% profit today, I have 1,000 on my account, I want to make $200 profit, that's my goal of the day. I'm not going to be greedy and aim for more than that. Each trade I take is a certain percentage as well, so you're not taking big risks on your account. If you make your profit, end the session. I'm trading on both me and my wife's account. Okay, well, around the world, we're only allowed to have one account each. So when you say you're trading on your wife's account, I hope you mean that you're trading together with your wife and you're helping your wife to learn better trading. Don't trade on two accounts, because there is a chance that you can lose one or both of the accounts if you are violating our terms and conditions, which say clearly one account per person. So by all means, traders need to apply discipline to be successful. Yes. Simple answer to that one, Ruthless. Yes, discipline is super important. Not only in trading, but in everything in life, right? If you have no discipline, if you go to bed whenever you want, you wake up whenever you want, you shave once every 6 months, your life is a bit reckless. If you are already a multimillionaire and you're doing that, good luck to you. If you're not and you want to succeed in life, I think it's important to have some kind of a guideline, some rules for us, right? Some things to focus on, some targets, discipline. It's important. If you disagree, by all means you can, but you'll have to explain it to me as well for me to understand. Nowadays, especially with the modern times that we're living in, I think now more than ever, we need some guiding voices, especially for us men out there. We need someone to guide us and tell us what is right and what is wrong. We don't have much guidance, do we? Okay, my question above, Aziz, sorry, I saw your question, I'm not dodging it. Is a good strategy, can it be merged with a triple trend strategy as both are for 15th? Well, not really. Aziz, not really. I would not merge this together with the triple trend one. They are both quite complex on their own. If you're going to move this thing together with something else, with a triple trend, which includes using other indicators in there, you'll just fill your page up with a whole bunch of indicators. You'll confuse yourself because you'll get, for example, an earlier signal on one, a later signal on the other. You will most likely in the end fall back to just using one of the two, or you'll be using the triple trend, or you'll be using this one. So it's best just to choose one of the two. Test them both out. I'm very happy, Aziz, that you are using or you're experimenting with the triple trend one. So test this one out as well. See what results you get. And you can always have, like I have as well, multiple setups based on what you see with the market. If you see that the market is in a strong trend and it's going in a very nice direction, you can always say, okay, last week I used the triple trend. It was good, but not great. The week before that or the day before that, I used the EMA and MACD. This did do very well. So I'm going to use this one. So always be ready to alter. Don't stick on one thing, guys. One day you can use one day the other, and you'll get a bit of mixed results, but that's not bad. Once you've determined which is the best one for you, that's the one you use. So Thank you there, Aziz, for setting me up, alley-oop, for the next one. If you are good at trading, if you tried this one out and you like it, check on our channel and other playlists we have. There's a whole bunch of other ones like the triple trend that Aziz mentioned. You can learn different strategies for trending markets. We do have the video coming up next week for the fractals strategy. That one is more for a non-trending market. So you can have multiple setups. If you see the market is trending, as it is here, easy to see with this. Clearly, I know just from the EMA here that the main trend is upwards. Here it's hugging really close to the moving line, to the EMA, so I know that this is not the most optimal. Then I can see here again a very big upward trend. Very important, just this information alone is good. What kind of trend I'm looking at. At moments when I see the market is hugging onto the EMA here, I can say, okay, the market is non-trending now. So I can switch to one of my non-trending strategies. And the fractals one for next week is going to be a good one for that. All right, last question I'm going to answer here. But first and foremost, let's take it back to the platform. There was the thank you and Q&A notification. Let me put full cam on for the last questions here as well. And Mr. Felix, let's see. I hope martingale money management strategy can do best with binary options. Okay, well, money management is great, standard approach, but martingale is one that always worries me. I tried it. Many traders I used to work with tried it, and it has a bit of a high risk, high reward kind of a thing. But if you're willing to take those high risks, definitely can go for it. But I would advise lots of caution with the martingale. You need to have a big balance on your account to be able to take those big trades, to cover those. And I'm much more in favor of the other ones we showed on our webinar for money management. I would say percentage trading, 1%, 2% or 3% of your balance, aiming for a 10% loss worst case scenario, 20% profit on a good case scenario, or even other approach could be the reinvestment of profit. Not as aggressive as the martingale, a little bit more aggressive than the standard approach. If you got no idea what I'm talking about, there is a video we have made about money management for binary trading, and there's a money management for advanced trading we made as well. That's more for Forex and ETFs. But if you don't know what I'm talking about, if you don't know what money management is, definitely that's a good video to watch next, guys. Right, my time is almost up. I believe that covers more or less everything. Any more questions you have, guys, or if you're watching this later and you have questions, put them in on our chat underneath, on the comments underneath. I'll be answering, my team will be answering, our support will be answering. So there's lots of help coming to you guys underneath in the comment section. So this is a good way for you guys to get information and hopefully continue the learning process. Right, guys, I think that's it. I'll be back very, very soon. In a couple of weeks, we have another live one. Next week, we have the fractals video. You will all be notified about that one being uploaded as well. And I hope you guys have a lovely weekend coming up, and a nice day of trading today and tomorrow. Good luck with everything, guys. And I will be seeing you all very, very soon. Take care. Bye, guys.